Thank you very much indeed. Now, the mid-market has historically been the very heart of this sector. So to discuss building a mid-market platform for growth, it's my great pleasure to introduce Shani Zindel, founding partner and chief investment officer at Livingbridge.
Good morning. Tim asked me to come and talk about private equity strategies in the mid-market, and that's a massive topic. I couldn't possibly do it justice. So I'll tell you a bit about the Livingbridge journey and why we've done what we've done. People often look at our business from the outside in and say to me that it looks really complex. And to be honest, when you're in it, it sometimes feels very complex, but it's all been quite deliberate in terms of how we've built the business out. So just to give some context, these are unquote stats of buyouts sub £250 million from January 2015 until September. So just under 4 years, 406 deals, the bulk are in the small deal bracket. And to be fair, many people in this room would call this the lower mid-market rather than the mid-market. It's where we play. The key thing is that most of the deals are small, but the other thing is that the numbers of deals are very consistent year on year, sort of 80 to 100 deals a year, if you exclude the years of the global financial crisis. And this, by the way, excludes the very many early stage development capital deals. But there's lots of deals to do. So we had to ask ourselves a question some years back, and it was a really simple question. Do you want to grow? Do we as an organization want to grow? And that really means growing your funds under management. And the answer was yes. For some people, the answer is no, and that's absolutely fine and valid. But in the context of we wanted to grow, the next question we had to ask ourselves was, do we want to grow within our core market, where we'd built all our knowledge and expertise, or do we want to grow out of it? And today, we're investing 3 funds across this lower mid-market, and the funds are defined purely by the size of the equity check that we're investing. Everything else is the same. The sectors, the type of business, the type of deal that we're doing, and the resources that we're bringing to bear. So it splits into 3, £2 to £5 million equity check, 5 to 25, and then above. I've just put some numbers at the bottom in terms of the track record, because it's important. The track record is strong, but more important than the fact that it's strong is that it's very long-standing and it's very consistent across the funds and across those companies. What's the number there? 124 companies, and 80-something exits. So it is a long-established track record, and that's what we were clearly looking to capitalize on when we set our growth strategy. So the reason we chose to grow within rather than to grow out the market was pretty simple, to be honest, to us. I mean, the obvious, more simple, probably more lucrative way of doing this is to raise a bigger fund and do bigger deals. Again, a really valid strategy, but not one that we wanted to pursue. And the reason was that our heritage, this business was founded in '97, and we'd always been doing lower mid-market deals. So that's where we'd grown up, that's what we were good at, that's what we knew. We also wanted to grow the business, but retain the deal size. And most importantly, we wanted to offer, we believed that what we could do with the track record and the strategy was offer large institutional investors access to what is actually typically quite a hard-to-access market, which is investing in small, fast-growing businesses. And we felt that if we offered opportunity across the platform, rather than in a single fund, single strategy, we'd make that a little bit easier for them. So that was why we did it. Now, we talk at Livingbridge a lot about the platform. We're 3 funds, we're investing across a platform. What exactly does this platform mean? And the platform's really 2 things. It's people and it's capability. I'll come on to the capability. In terms of people, we've got over 50 investment professionals, and you can almost double that when you add all the other stuff, finance, IT, legal, compliance, HR. It's a very big business. We also grew internationally. So we felt that if we're going to help fast-growing businesses grow, we're going to have to do that in more than just our home market. But really what we had to do was break down the traditional role of the deal doer, very different to how it used to be done, and build specialisms in certain areas. Specialisms in origination, in value creation. Many areas across the business require specialist expertise rather than the traditional approach of one person doing everything. We also had to industrialize our origination. We're trying to do deals across 3 different funds. It's 3 to 4 deals a year per fund, so it's very busy, and you need to see a lot of deal flow in order to keep feeding those funds. Most importantly, we had to stop relying on the traditional rainmaker model. So it's a very different way of working. It's a very different way of managing a team to the single fund, single geography type of working. And then the next obvious question, really, is what do all these people do? And this is where a lot of our investment and resources has gone into. What we do at Livingbridge is we help companies grow faster, and we help them be better. And no one single person can do that across the investment spectrum. So we've invested in things like talent. We've got 3 people in our business who work with our portfolio companies to help them recruit. We have 3 people in our business who work with portfolio companies on customer acquisition. How do they grow their business faster? We've today got 3 people in Boston, 4 people in Australia, and that all happened really quickly. I have to say, the big learning on international, which many people have gone before us and done, and have learned these lessons, but it's hard, and the payback takes a lot longer than you originally expect. We've got people in the business focused on buy and builds for the portfolio company, and we've got people in the business focused on technology. It's been really interesting over the last few years. We mainly do service sectors. The technology deficit that sits within small UK businesses is really quite large. So helping them close that gap quickly is important. We've had to invest in specific resources to do this. So this is the platform, the people, and everything that they do, and it's all designed to help small, fast-growing businesses grow faster and be better. But what it means for us at Livingbridge is having to run the business really very differently to how it used to be run. You know, a bunch of deal doers, great contacts, great skills, coming together, doing deals, making money. It was brilliant, I have to say. It was a lot of fun. And for many people, still a really valid way of doing private equity. The way we've chosen to go and grow the business has just required a completely different approach to running our own business. I mean, we've had to invest in a management layer. You know, I'm the CIO. I used to just be a deal doer. And now I have to manage a whole lot of people, and more people have had to do that within our business. We've had to really think very hard about how we design our organization. You know, so all these capabilities had to be built from the ground up. We've had to invest very heavily in training and development of people. We like to recruit young at Livingbridge, and we like to grow our own, because the culture is one of very heavy collaboration. And again, that's something you have to build into the business. People have to work together in order to offer these capabilities across the platform, acknowledging that the skills don't all sit in one person's head. So culturally, it's quite different to how it traditionally might be in private equity. Collaboration really is the key word, and nobody at Livingbridge, in fact, it drives LPs mad, because they try and do attribution analysis when they're looking at deals. You know, who did this deal? Who's responsible for this terrific return? We can't answer that, because it could be anything from 4 to 10 people who will have engaged with that business across its life cycle. I thought I'd just give a couple of examples of what this all means in practice for our portfolio companies, because I'm clearly talking here about portfolio companies and how we help them grow, but also our own business and how we've had to grow it. This is a business, M24/7, which is in our mid-market fund. It's gone from about £45 million enterprise value to about 170, 175 million. But what we've done is exactly what we've done with the next business called Carousel, which is in our smallest fund, our growth fund. And that's gone from about £10 million of value to about £40 million of enterprise value. So clearly completely different scale. But just flicking between the two, what we've done at Livingbridge is build a common language and a common way of doing things. Effectively, we've designed methodologies to ensure that we approach every portfolio company in exactly the same way. And it's largely around something that we call the 3 Ps, the people, the platform, and the position. And you'll see in both of these businesses, on the people side, we've done extensive recruitment. So a chief revenue officer, chief marketing officer, and a chairman in M24/7. And in Carousel, we've got a non-exec, we've hired a German MD, a chief technology officer, etc. In both of these businesses, we've invested heavily in the platform. That can mean anything from the physical infrastructure to the sales team to the technology, whatever it is that that platform needs in order to cope with the growth. And then, again, in both of them, it's the positioning. So how do we take these businesses on to the next stage? How do we, Matthew talked about the value, the proposition, the strategy, what differentiates these businesses and why are they going to win against their competition? We spent a lot of time with both of them. Interestingly, given the relative differences in size, both of these businesses have acquired quite a lot. Both have acquired internationally. In fact, in both these cases, they've acquired in Europe. And you can do the same across the size spectrum. And because we know that you can do the same across the size spectrum, and because we've done it, 120-something times, we feel very confident that you can spread this platform, but still stay true to your roots of being a lower mid-market investor. So that's really, what we've done at Livingbridge. Not only does this work very well for the portfolio companies in that they are able to grow and become more valuable, but what it's allowed us to do at Livingbridge is build a business in private equity rather than just be a private equity fund. And whilst it has many challenges and it's a lot harder than we probably thought it would be when we set out to do it, it's very rewarding. And as well as building lots of businesses in our portfolio that we're very proud of, we've actually built a business that we run, that we ourselves are very proud of. Thank you.